Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense financial filings to see what is really going on behind the numbers, and spoiler alert, Prosperity Bankshares Incorporated might be a lot busier than its plain vanilla name led on. In this annual report for 2025, we're going to dig into how this Texas bank is doing, what risks they're facing, and some pretty significant moves they've made. Before we dive in, if you love getting these kinds of straightforward financial breakdowns, hit that subscribe button. We also have a thriving community on Discord, linked in the description below, where we discuss these filings in more detail. Don't miss out. Alright, so Prosperity Bankshares Incorporated, or PB as it is known on the New York Stock Exchange, just dropped its annual report. This is the big one covering the whole year. It is like the company's yearly performance review, and we're here to grade it. Now, banks are always growing, buying other banks, but Prosperity Bankshares Incorporated seems to be in hyperdrive. They've announced not one, not two, but three major acquisitions recently or pending. They bought American Bank Holding Corporation on January 1st, 2026. And Southwest Bankshares Incorporated on February 1st, 2026, and they've got a huge one with Stellar Bancorp Incorporated in the works announced January 28th, 2026, worth a whopping $2 billion. This is growth on steroids, but it always comes with big risks. We will definitely be keeping an eye on how they handle integrating all these new branches and customers. Let's talk about what keeps bankers up at night. Interest rates. Prosperity Bankshares Incorporated, like any bank, makes money on the difference between what they earn on loans and what they pay out on deposits. When interest rates go up and down like a roller coaster, it can seriously mess with their profits. They mentioned that interest rates have been volatile, dropping after some big hikes a few years back, but still fluctuating. This makes it tricky to manage their money and could hurt their earnings if they can't keep up. A big part of Prosperity Bankshares Incorporated's business is loans tied to real estate, specifically commercial real estate, which includes apartment buildings, and also 1 to 4 family homes. At the end of 2025, nearly a third of their loans were tied to commercial real estate and over a third to 1 to 4 family homes. That is a huge chunk of their money. Real estate is great when prices are going up, but if the market cools off, these loans could become a big problem. And they're mindful of this, dedicating a lot of the report to how they manage this risk. Now let's look at the nitty-gritty on their loan quality. At the end of 2025, about 0.69% of their total loans were considered non-performing. That means loans that are not being paid back as expected. That is not terrible, but it is a bit higher than the 0.37% they had in 2024. More alarmingly, if you exclude their warehouse purchase program loans, which are a bit of a different beast, that number jumps to 0.74%. This is a trend to watch. A slow increase might be okay, but if it keeps climbing, it could signal trouble. Okay, so how did they actually make money? Their net interest income, that is the core banking profit, went up to $1.08 billion in 2025 from $1.03 billion in 2024. That is a solid increase, but it is not all smooth sailing. Their interest income on loans actually went down a little, which suggests they might be doing fewer loans or charging less interest. The good news is they managed to cut down the interest they paid on their deposits and other borrowings, which really helped their bottom line. When banks aren't making a ton on interest, they look to other areas like fees. Their non-interest income, which includes things like card fees and service charges on accounts, stayed pretty steady at about $168 million in 2025. There was a notable gain on a Visa stock exchange, which gave them a nice little boost, but overall, it looks like fee income is not a huge growth driver for them. Managing a bank takes a lot of people. Prosperity Bankshares Incorporated spent about $353 million on salaries and benefits in 2025. This is pretty much the same as the year before, despite hiring more people. This points to good cost control, which is key for efficiency in banking. They believe in keeping their people happy and competitive, which is generally a good sign for a stable business. Speaking of efficiency, their efficiency ratio, which measures how much it costs them to generate a dollar of income, was 44.55% in 2025. That is actually an improvement from 48.43% in 2024. This means they're getting better at managing their expenses, which is always a positive. A lower efficiency ratio is generally better, showing they're spending less to earn the same amount. Now let's look at how they're setting aside money for potential loan losses. At the end of 2025, they had about $333 million set aside. This is a bit lower than the $351 million they had in 2024. While their total loans decreased slightly, this reduction in their loan loss reserve might signal management feels more confident about the future. or it could be a strategic move. They are also separating out allowances for originated loans versus acquired loans, which is a more detailed look that helps them manage risk better, especially after all those recent acquisitions. When banks need extra cash, they can borrow. Prosperity Bankshares Incorporated has a significant line of credit with the Federal Home Loan Bank. At the end of 2025, they had about $1.95 billion borrowed from them. This is down from $3.2 billion in 2024, meaning they likely relied less on this external borrowing, probably because they had enough customer deposits. This is a good sign showing they can fund themselves internally. Looking at their balance sheet, their total assets ended 2025 at $38.46 billion, a slight decrease from $39.57 billion in 2024. Their loans, which are the biggest asset for a bank, also saw a small dip, but their deposits, which are their main source of funding, actually nudged up a bit to $28.48 billion. It seems like they're managing their size, perhaps being a bit more selective with loans after all the acquisitions. They also repurchased almost 2.1 million shares of their own stock in the last quarter of 2025. This can be a good sign, as it might mean management believes their stock is undervalued or they're trying to boost earnings. Per Hare, they authorized more buybacks in 2026, so they're continuing the strategy. So what is the big picture here for Prosperity Bankshares Incorporated? On one hand, they're growing aggressively through acquisitions, which can be a great strategy if done right. They're also showing improved efficiency and solid profits. However, the slight increase in non-performing assets is something to keep an eye on. And those huge acquisitions mean a lot of integration risk. The real test will be how well they digest these new banks and maintain their asset quality in a still uncertain economic environment. They're definitely a company to watch as they navigate this rapid expansion. Alright, that is our take on Prosperity Bankshares Incorporated's latest report. What do you think about their aggressive acquisition strategy and their financial performance? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more. And don't forget to join our Discord community, linked in the description, for even more in-depth financial discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.